Hello everyone, welcome to another video, another weekly analysis. So for this week, we have a few pairs, but right now there isn't really any potential move in the market to capitalize on right now because the market they're still forming up. After what happened fundamentally, with the tariffs and all that, the markets it's had manipulation. So now it's trying to correct itself, trying to, go in the direction it's meant to go, fill up certain, certain weeks and whatnot. But the fact remains that the market will trend at the end of the day. You see what I'm saying to you? Right now it's consolidating, but it will trend. So the fact remains that we just have to sit on our hands and wait for the right market to come. You see what I'm saying to you? Wait for the right market to come. So right now the only pair, that might have opportunities to capitalize on might be GBP card, GBP card and USD JPY, whichever ones. I think that's about it. I think that's about it. Maybe GB, excuse me, USD card. Yeah, sorry. So USD card as well. USD card as well. So for now, these are the pairs. There's no really, there's not a lot of pairs to capitalize on right now. But if you go and browse through other markets, you might find something. But for the ones that we focus on, that's what I'm saying to you. The ones we focus on, these are the valuable trades that we could take or not. So USD card, USD JPY, GBP card, these ones that they are valuable. These ones, the structure looks really really good. So moving on, be that as it may, for next week we should look at GBP card. Now, as we know, top-down analysis. Let's go from the top. Let's go from the top. Now GBP card. What do we see? Like, what structure do we see? What structure do we see? Do we see bullish structure or do we see bearish structure? It's important to know this. Do we see what bullish structure or bearish structure? 1 minute. I like it both sometimes. So all right. So on GBP card, what do we see? I see a bullish structure. If you do not see a bullish structure, then you need to go see an optician, sir. But lower low, lower high. Excuse me. So we've had lower low, lower high, lower low. We've had the double bottom break of structure, double bottom. We're moving sideways. We're consolidating. Now you need to understand this. After a particular consolidation, there's going to be a resulting trending period of time. I take it again. After the market has consolidated for a long time, it's going to trade for a long time. You know what I'm saying? So right now the market, you can see GP card, you can see from here. So yeah, it was consolidated, right? It consolidated for about from 2017 that consolidated, but it there was there were there were possibilities of trades. You see what I'm saying to you? For somewhere, for example, yes, but it kept moving sideways, up, down, up, down, up, down, up, down. It's in a range right now. It's in a range. So this is a ranging market. It is tradable, but I prefer a trending market that is moving like the way we see this one right now. So what we have to do is this: as we've analyzed and we've come to a conclusion that we are bullish on the monthly time frame, we expect that the weekly time frame, excuse me, we expect that the weekly time frame and the daily time frame will follow suit. You see what I'm saying to you? I'm going to go to the lower time frame. We're going to go to the lower time frames and I'm going to look for entries. We're not going to go there looking for sells. No, we're going to go there looking for buys. So now let's go to the weekly time frame. Let's see what's happening on the weekly time frame. Are we bearish or are we bullish? On the weekly time frame, we can see that we are very much what bullish. We are very much what bullish. Higher high, higher low, higher high, higher low. This is not yet a higher low because we haven't created a higher high, but we are on our way there. You get the gist. So we are bullish, right? Now we cannot trade on the monthly time frame because it takes time for these are huge candles. We cannot trade on the weekly time frame as well. We have to go to the daily time frame to trade in direction of the trend. So so on the daily time frame right now, what are we? Are we bullish or are we bearish? We are as well bullish. Now, this is something that I preach a lot. When the market breaks into, or rather breaks through a major zone like this one, for example, this zone is a major zone. This price right here, this thick black line is a major zone. It's a weekly zone. So whenever the market breaks through, we need the daily time frame to come and retest it. You see what I'm saying to you? We need the word daily time frame to come and give us a retest. Why do we need retest in trading? Why is it important that we all everybody say break and retest? Why do we have to retest? Because we need to be sure that we have not been faked out. We need to be sure that the market is indeed telling us that yes, I am about to use this. I am about to use this price range to go all the way to the upside or go all the way to the downside. We need the market to retest to tell us that it is indeed strong enough. It is indeed right that it is going to go to the direction that we desire it to go. Now, if you notice, I couldn't trade the UP card at the time from when it from when it started to from when it broke out because I needed the retest, right? Now look, it came up, we're almost at the top, we're almost what at the top, like right here. You can see then it started to come down, started to come down, started to come down, and it came back into the same level, into the same area that we have been crying about, talking about we need retest, we need retest. That's what I'm saying to you. If you go on the weekly time frame, you see how beautiful and precise it is. Boom, right there. Retest right there. Now, on the daily time frame, I can now look for entries. I can now plot my lines, my key levels to say, okay, whenever the market gets here, I look for buys. And you can see this was plotted time ago. I wish I could have. I wish you could go back and see that this was plotted a while ago, but I didn't make a video on GBP card as at the time. But right now, you can see this was plotted a long time ago. It broke, it retested it, it went up. Now, when the market went up, I couldn't get in when the market was bouncing from this place, I didn't get in because I had other trades to get. I was in another trade. Then it was made to me that I should check the charts again on GP card and see. And I went there and I saw that it had already come back into the same area that we were looking for. It had already come back into the same price that we're expecting it to buy from. And then I go to the lower time frame. You can see how I am, analyzing these markets from time frame to time frame. Every time frame has its own, specialty. Now on the lower time frame, the 4 hour, I need a retest. I need a what? A retest on the 4 hour time frame. It has gone up, now it has come down. Perfect. This is what I'm saying to you. Now I need some sort of I need some sort of a structure to plot my trend line. I cannot find a structure here. You see what I'm saying to you? I cannot find a structure here. So I go to the lower time frame, the 1 hour as well, to look for structure that we could use to what? To plot our charts. And if you look, there is still no structure here. But then I then waited. I take it again. I then what? Waited. I then waited. I waited and I waited. And then it gave structure. And then boom. This was how I executed. And then it gave structure. Now this is my entry strategy right here. I'm going to lay the blueprint out for you right now. This is how I get in the trade. Yeah. So after the break of the trend line, I get in with half a percent. Right after the break right here, I get in half a percent. Now I wait for the retest, and then I use the same strategy. Break of counter trend line, break of support, and then I execute another one, another entry with the other half a percent, and then I have two trades open, leading all the way to 1%. The same thing to you. I have two trades open. Now the reason is this. The reason I use this strategy is because it helps me test the waters first. It helps me understand because most of the time, if you I'll show you a chart right now on USGJ where we had the break of the trend line, right? And then because we had used half a percent to test the waters to see if indeed it's the winner that we can capitalize on, the market was it came and it flushed everybody down. So when people are taking losses of 2%, 3%, I'm taking a loss of half a percent. Why? Because I know what it means to test the waters, to capitalize. So I executed on GBP card. I am still holding my trade on GBP card. Take profit is take profit, stop loss is stop loss. I do not care. It's either up or down. Yes, you get what I'm saying to you? It's either up or down. It's either up or down. So I'm expecting the market to get all the way to this level right here, and then I get out. You can see we're almost there. This is my take profit right here on this body around here. As you can see, we're almost there right here. As you can see, we're almost there, but we didn't touch. We have to touch. According to what my mentor say, it did happen. It did happen. It did not happen. So I cannot force it. I cannot stress it. And I'm not going to get out of the market early. If the market decide to reverse right now and take me out, trust me, I still do not care. You know why? Because I have a calculated risk in place. And that's the only way to beat the market. It's not about being right or being wrong. It's not about having a strategy or whatnot. Trust me, it's about having the best, risk management. If I take a loss right now, I still do not care because why? I'm ready for the loss. I am expecting the loss to happen anyway, regardless, because why? I have my risk in place. But moving forward, yeah, sometimes I like to, see if the market is indeed, fulfilling some key levels. And on this trend line, we can see that we are right there. We had a bounce the first time. Now we had the pin bar rejecting. I'm expecting to reject again. Hopefully next week when the market opens, we could have a rejection, and then a double bottom can be formed here, and then a push to the upside. You see what I'm saying to you? What a push to the upside, because on the weekly time frame, you can see that it has formed a huge space here. It has formed a huge space here. So we're expecting to fill up the week. That is something that is a trick that happens to. It's something else. This is something that you should understand too. It happens to. So when the market leaves a week, behind and into the direction that we're changing, trust me, when the market opens, it's going to fill up that week. So we're expecting the market on the weekly time frame next week to fill up the week. So moving forward, I don't want to spend much time analyzing these markets. Moving forward. So now, there's something I'm going to show you. There's something I'm going to show you right now. Yeah, confluences have to build up. You have to train your eyes. You have to train your eyes to see certain things. That's why you need to spend time in front of the chart. You do not necessarily have to trade every time you come to the market. You have to train your eyes. When you come to the market, come to train your eyes. You see what I'm saying to you? Well, come to what? Train your eyes. So if you look right now, I see a reversal pattern happening, a beautiful head and shoulder happening. Head, and I see, you see the shoulder right here. Let me just use the whole of this one right here. I can see a head and shoulder happening. A head and shoulder is a reversal pattern, and it's happening in such a way that it is in the direction of the overall trend, which is bullish. This alone gives me strength, gives me more proof to say, okay, yes, we are indeed bullish. Now, when we break this head and shoulder, it is not yet a head and shoulder until we break the neckline. I take it again. A head and shoulder or a reversal pattern, double top, double bottoms, head and shoulder, they are not yet fully formed until they break necklines. Until they break neckline. What's the neckline? This is the neckline. Until we find a candle close above this, this neck right here, it is still forming. It is not yet complete. It is still a failed head and shoulder. Until it closes above with the candle, then we can say it is a head and shoulder. So moving forward, now I'm expecting what this market to break, and you can see how it is precisely in line with our areas that we have marked in the past. You see what I'm saying to you? What do I mean? The neckline, we're expecting a break and a retest into this level, right? We're expecting a break and a retest into the neckline, right? And you can see it is right above the area we have marked from the past. How easy do you need this to be? How easy? You see what I'm saying? How easy do you need this to be? So we have not just a retest of one psychological, not just a retest of support, but also a retest of the neckline of the head and shoulders. Come on, come on, come on. How easy do you trust me? A soothsayer cannot say this better than I have said it right now. How easy do you need to? Now we have theory confluences to tell us that this price 1.85500 is indeed a beautiful round psychological level to buy from. Price, trust me, price is precise. It's something to you. Price is precise. Price is what? Precise. You see what I'm saying? Price is precise. So on GBP card, this is what we're expecting. This is what we're expecting. This is what we need to happen. So I'm going to fall into USD card right now. USD card is it's bearish. It's bearish, but we're finding it difficult. You can see right now on the higher time frame, on the monthly time frame, we are bullish. Don't get it wrong. You have to take it for what it is. You have to take the market for what it is. It is bullish, but we are rejecting from. Excuse me. We are rejecting from a very very excuse me, we are rejecting from a very, very important area of interest. This level right here, this price right here. I was expecting that we will keep buying, but it did not happen. So we owe them to do. I have to be realistic. In trading, you have to be realistic. You have to follow what you see, do what you see. Don't do what you think should happen. Don't say, "Oh, it should happen." This month, no. What do you see? Do execute what you see. You see what I'm saying? So on the weekly time frame, we're bearish because we've broken structure. Now, if you see If you remember on GBP card, the first thing we said on GBP card was we needed a retest to tell us that it is not a fake card. Now the market is not just retesting it, it came back again and it's retesting it again until we can, and you can see that I'm not just plotting these levels right now. You can see these levels have been plotted long time ago, right above, long time ago. So also these levels below have also been plotted what a long time ago. So on the 4 hour time frame, we need a break and a retest. You can see that this level right here, the market came and it's rejected. See this head and shoulder right here. Now this is what we need to happen on GBP card. We need it to break below the neckline. This is a neckline. These two axes right here. This is a neckline, so we need it to break. So this is what we're expecting to happen on GBP card. But now you might be wondering, GBP USD card is going down. GBP card should be going up. No, no. Listen. With life and with trading, you need to be realistic. You need to be malleable. You need to go where the market tells you to go. You need to flow with the river. You need to flow with the ocean. You see what I'm saying to you? You cannot say, oh, GBP card is bullish, USD card is bearish. No, it cannot happen. Something is wrong. No, nothing is wrong. The markets are precise. I say again, price is precise. Price is what precise. You have to go where the market leads you, ladies and gentlemen. You have to go there. So if USD card is telling me, because to trade the pair, to trade pairs correlatively, trust me, it will hurt you. It will harm you psychologically. You see what I'm saying to you? Trust me, it will make you hesitate when you have to execute. So what you have to do is trade what you see. If Euro USD is bullish and GBP USD is bearish, trust me, trade what you see. Trade what you see. So on USD card, whatever is happening here, no problem. Whenever the market, so do you really think that this market is going to trend like this for a long time and not consolidate? You can see it trended, consolidation, trend, consolidation. So just relax, chill, get, crack a can of coke and drink and sip and relax. Watch the market do its thing. Watch people lose their money. Watch day traders, 1 minute traders. Watch them hit stop losses for no good reason. I bet you people are here buying and selling, buying and selling. They don't know what to do. Running like headless chickens. They don't know what to do. You see what I'm saying? But we know, because why? We have a bird's eye view of the market. We know what is going to happen from the higher time frame perspective. So I urge you lot to what? Wait, relax, chill. Let the markets do its thing. Let the market tell you what it wants to do. So we're expecting USD card to break and retest. Until that happens, we're not trading anything. We're not looking for anything else but a break and a retest. If it goes up, we look for retest and we look for entries to the upside. Simple. Simple. If it goes up, we go up. If it go anywhere the money goes, we go to go anywhere the money goes. You see what I'm saying? So anywhere the money goes. So if it goes up, we go up. If Trump speaks and the markets fall, we fall with the markets. We don't make the markets. I don't make the markets. You don't make the markets. You see what I'm saying to you? So let's go where the market leads us. So moving forward, if we should be done right now is 18 minutes. But on USDJPY, there's something I see also. There's something I see now on USDJPY on the higher time frame perspective. Now on the monthly time frame, we're nearly done. We haven't finished on the monthly time frame, but we are bullish. Why? Higher high, higher low, higher high. We are still forming a higher low because we haven't created a higher high. So this in hindsight is looking like a double bottom. It hasn't formed a double bottom yet because it hasn't broken the neckline. Until it breaks the neckline, then it's a double bottom. You see what I'm saying to you? So it's looking like a double bottom, but as long as the monthly time frame does not close below this area, then we are bullish. So on the weekly time frame, you can see that we have obviously reached here. And see, listen, history repeats itself. Trading is all about history. The first time the market got here, it bounced. Got here, it bounced. It's here again for the third time. If it has happened twice, trust me, it will happen the third time. Even if it doesn't happen, we are realistic. We go where it tells us to what go. So on the weekly time frame, we're expecting the market to bounce. So the daily is already bullish. The daily is what already bullish. So on USD the daily is already bullish. So we need the break, we test, and then we go to the upside. You see what I'm saying? So let's learn to be realistic. Let's help ourselves in being realistic. Do not feel trade what you see. Do not feel trade what you see. So have a great weekend. Ciao ciao.